On March 18th, 2026, Beijing time, MiniMax released M2.7 and dropped straight into the hottest fault line in AI. This was not just another model launch. It was a collision between cheap frontier performance, license trust, censorship risk, and the bigger China versus US compute battle. One release, four pressure points, all detonating at once. For years, the frontier story felt simple. OpenAI, Google, Anthropic, and Meta set the ceiling. Then DeepSeek R1 broke that mental model. Chinese LLM traffic jumped 460% in 2 months, and Chinese global share moved from roughly 3% to nearly 30%. So when MiniMax arrived with M2.7, it stopped looking regional and started looking structural. MiniMax's founder gave away the entire tension in one line. If they had to start over, they would have gone open source on day one. That matters because it tells you the company understood exactly where developer trust came from. MiniMax was founded by SenseTime veterans, but after the Hong Kong IPO, openness stopped being philosophy and became a monetization decision. China's LLM rise was powered by four engines at once. Policy pushed for parity by 2025 and leadership by 2030. Talent flowed back from global labs. Data scale came from platforms like WeChat and Douyin, and then export controls added the final twist. Less hardware forced Chinese labs to get far better at squeezing performance out of every training dollar. MiniMax starts in December 2021, then proves it can ship consumer traction with Glow and Talkie before most Western observers are paying attention. That is important because MiniMax never behaved like a pure research shop. It was already learning product loops. By January 2026, once the IPO hit, developer trust and shareholder pressure were always going to collide. The flip happened fast. DeepSeek R1 shocks Silicon Valley. MiniMax M1 turns efficiency into a headline. M2 ships with an MET license. Chinese model share surges. Then M2.7 arrives with self-evolution branding, aggressive benchmark framing, and a license backlash almost immediately after the weights land. In barely a year, the story changed from China is behind to China may be bending the cost curve. This is the most combustible piece because developers treat licensing like a trust contract. MiniMax trained the market to expect real MIT freedom with M2 and M2.5. Then M2.7 landed with language that sounded open before commercial use was pushed behind written authorization. MiniMax says that was about bad faith hosting. The market heard something else. Openness first, control later. MiniMax highlights a 56.22% SWEPRO result and a 57% Terminal Bench 2 score. Those are real numbers, but the stronger read comes from independent testing, where Kilo described M2.7 as roughly 90% of Claude Opus quality at 7% of the cost. That is impressive. It is also not the same thing as true frontier parity. The deeper controversy is not moderation settings. It is training level bias. If political compliance is embedded in the reward signal and the training corpus, then the behavior is learned, not pasted on top. That is why researchers found politically sensitive prompts can distort answer quality, code quality, and neutrality across multiple languages. Cheap open weights are not automatically neutral infrastructure. The phrase self-evolving model sounds like science fiction. The reality is more grounded. M2.7 seems to automate pieces of reinforcement learning operations, monitoring logs, spotting instability, debugging routine failures, and handling checkpoint recovery. That can save a large chunk of engineering labor, but it does not mean the model is setting its own goals or inventing its own architecture. Here is the paradox in one snapshot. The US controlled about 75% of global AI compute in 2025. China's share fell from about 37.3% in 2022 to roughly 14.1% in 2025. So the hardware squeeze clearly worked. And yet model pressure still intensified. Controls slowed scaling more than they stopped progress. If you want to understand why M2.7 can be cheap, start with mixture of experts. A dense model wakes up everything for every token. MoE is more selective. MiniMax advertises 230 billion total parameters, but only 10 billion active per token. That means you keep a giant knowledge surface while paying something closer to a much smaller inference bill. The clean mental model is an overnight ML operations engineer that never sleeps. Traditional training burns human time on watching logs, diagnosing failures, restarting broken runs, and checking evaluation drift. M2.7's agent appears to automate parts of that mechanical loop and improve its debugging behavior through reinforcement. That is labor leverage. It is not runaway autonomy. This distinction keeps getting blurred on purpose. Proprietary means API access and almost nothing else. Open weight means the parameters are public, but training data, code, and commercial rights can still stay closed. True open source means the weights, code, and license really permit broad reuse. M2.7 triggered backlash because it tried to feel open source while behaving like a guarded open weight release. RLHF sounds harmless until you ask who defines the reward. If raters are judging whether an answer is helpful and politically compliant, then the model is not merely learning helpfulness. It is learning obedience to a specific narrative frame. That means bias can migrate into the weights themselves. Hosting the model elsewhere changes operations. It does not fully erase the learned tendency. The next wave is not slowing down. DeepSeek V4 is already being discussed near the 1 trillion parameter range. Shipu and Alibaba keep climbing benchmark ladders, and the release cadence is compressing fast. The market is moving from occasional model shocks to continuous pressure, where every few weeks another lab can reset expectations on cost, speed, or openness. This may be the most painful pressure point for US labs. MiniMax M2.7 frames input cost at 30 cents per million tokens. Claude Opus sits around $5. That is a roughly 17 times gap. Once that kind of spread becomes normal, the debate stops being who is smartest in the abstract and becomes who is smart enough at a price buyers can actually justify. Watch the pattern. Open early, earn distribution. Attract developers, then tighten the terms once the ecosystem matters. Public markets make that pull even stronger. That does not mean every Chinese lab will follow the exact same script. It does mean the era of everything is MIT is already fading, and developers are getting much more suspicious of open-style branding. We should keep the current breakthrough in perspective. These systems are getting better at executing defined loops, not deciding where civilization should point them. Humans still set the objectives, the evaluation criteria, and the safety boundaries. So yes, M2.7 signals a real jump in automation, but it is still an execution optimizer, not an autonomous research civilization in a box. The censorship issue does not disappear just because the weights are downloadable. Fine-tuning can soften visible behaviors, but it rarely rewrites the full base tendency. And because those models are cheap, capable, and convenient, adoption still keeps rising. That is what makes this uncomfortable. The governance risk and the economic incentive are moving in the same direction. Export controls clearly reduced access to top-end hardware and made scaling harder. That part is real. But they did not stop Chinese labs from learning algorithmic efficiency, exploiting MoE architectures, and shipping models that developers around the world still want to test. So the current equilibrium is strange. One side keeps more compute, the other keeps getting better at surviving with less. If you want to audit the story from the ground up, start with the company and model origins. Look at MiniMax's official M2.7 materials, the founder background from SenseTime, and the company history reporting around Talkie, Glow, and the IPO. Those sources establish the basic timeline, the founder philosophy, and the point where business pressure begins shaping technical posture. Then go to the technical layer. MiniMax's own benchmark claims matter, but the sharper read comes from independent evaluation, especially Kilo's test results and the broader benchmarking context from sources like artificial analysis. That is where the real gap appears. M2.7 looks extremely strong on value, but the full operating picture is more nuanced than the launch framing suggests. For the licensing and trust fight, Decrypt captured the commercial use shift clearly, and the Hugging Face discussion threads show just how fast developer sentiment turned hostile. Those reactions matter because they reveal the real cost of muddy language around openness. Once developers believe a lab is playing games with the label, the brand damage can outlast the benchmark win. At this point, the geopolitical race runs on 3 loops at once. The US holds the stronger compute position. Chinese labs keep pressing the efficiency advantage. And the global market sits in the middle, deciding what to adopt based on price, speed, and trust. That means export policy, developer behavior, and model economics are now feeding back into each other in real time. Current discourse is messy because both sides have a case. Developers see astonishing price performance and faster iteration from Chinese labs. Critics see licensing ambiguity, governance risk, and propaganda concerns that are not easy to fine-tune away. So the conversation keeps swinging between, wow, this is efficient, and wait, what exactly are we normalizing by adopting it at scale? The most likely future is not a single winner. It is a harsher market. Expect more powerful open weight releases, fewer truly permissive licenses, more automated training loops, and a much tougher argument over what safe autonomy even means. The contest is shifting from raw intelligence to intelligence per dollar, per watt, and per governance headache. That is why MiniMax M2.7 matters. It is not only a model, it is a stress test for the next phase of the AI race. Can Chinese labs keep forcing prices down? Can developer trust survive license tightening? And can governance keep up before the next cheap frontier release lands? Let me know which one breaks first: pricing, trust, or geopolitics. And I will catch you in the next one.